Tech is getting some welcome reprieve today from the recent selling. Our next guest says, though, momentum investors could soon rotate out of that trade. BTIG's Jonathan Krinsky here to break down his call. It's good to see you. I'm curious as to what you think about, the Nasdaq's gone through so much pain, and whether you think it's specifically close to a bottom or not.
The short-term market call is very difficult here. You have a lot of cross currents. Obviously, you have month end. You have some very weak parts of the market that are coming into month end. And so when you add that up with positioning and sentiment, clearly you can make the case for a counter trend rally. But, that in our view, that's the small part of the equation. And we still see a significant move lower ultimately for both the S&P and the Nasdaq. So, again, it's kind of the equivalent of, over the last 12 years, trying to call for market pullbacks. You get these 3, 4, 5 day little pullbacks, and ultimately the trend resumed higher. We think it's kind of the opposite now, where you can get a 3, 4, 5 day rally. It's not changing the primary trend of the market, though.
Remind our viewers, people who don't see you every day, how you got from a point where you thought we could initially go below 4,000 on the S&P, which you were obviously correct on. But how do you go from, I think we may break 4,000 to what is now 34 to 3,500, a medium-term view for the S&P? How'd you get from A to B?
Well, when you're following trend, just when you get to a point where the market can pause does not mean it immediately is time to reverse that trend, right? And so 4,000, it seemed like a logical spot to pause. I think we're seeing that consolidation, that congestion phase. And that's why we think the near term is very difficult. You're kind of coming to terms. Look, we were down 7 straight weeks on the S&P. You've had a lot of damage done. And so it would make sense to see some kind of consolidation here as we move into the summer. Where we get to 34, 3,500 at this point is really a culmination of a couple of things. First, it's really just from a pure technical perspective, it's the pre-COVID highs and the 200-week moving average on the S&P. 200-week moving average tends to be tested in bigger market drawdowns. Secondly, we've just seen more and more evidence of more stocks and more sectors round-tripping their COVID moves. So, we saw it in the ARC names. We've seen it in a lot of the high-growth names. And so, ultimately it makes sense for the S&P to really retest where it was before COVID. And then ultimately, the last piece of the puzzle is the fact that, in bear markets, eventually everything does succumb. And we've seen most areas of the markets get hit, but we haven't seen energy. We haven't seen really the mega cap defensives and pharma. So that's really what gets you down to 34, 3,500.
Hey, Jonathan. Okay, I thought we were going to have some news, which we will in just a moment. So we're up 5% or so on the S&P since the rebalance. And you said something interesting just now. Do you think that this, what you called it consolidation, but this bounce, if you want to call it that, has enough staying power to last for, I don't know, a month before sort of greater reality sets in on what still needs to happen for the major averages? How do you see that?
Yeah, I think that's perfectly reasonable. Even 2 months, perhaps. If you look at an analogy, and again, we're not saying this is anything like 2008, but just to look at the 08 bear market to put things in perspective, from October 07 into July of 08, the S&P was down about 20%, just as we are now, right? And then we had a 2-month reprieve, a 2-month bounce from July and August into 08. And what's remarkable is in August of 08, the VIX was actually was below 20, if you can believe that, a month before Lehman Brothers. And so, I think it just goes to show that markets, once they kind of, exhaust themselves in one direction, it doesn't mean that you have to reverse and go in the other direction. You can simply kind of come to terms with the price level you're at. And I think that's where we're at. I would be surprised if we go straight down to 34, 3,500. But again, if we go up to 4,100, 4,200, we don't think that changes the primary trajectory. And I think that's the key piece here.
All right. Well explained. And I appreciate you doing that. I got to run. I do have that news that I was anticipating. Jonathan Krinsky of BTIG.